principles of private equity are this. More often than not, certainly 80 to 90% of the time, the business has to be profitable and it has to have a substantial amount of profit to reach certain thresholds. So if you're advising or working with a business that is not very profitable right now or is kind of break even or something like that, it could be a tech business or something like that, we would look at that from a private equity standpoint as distressed. They only really happen if a business is going to get sold into another business and then there is a profit that's going to happen once that transaction happens. So the first thing to understand is don't really start talking to private equity unless you have a business that has a certain amount of profit, certainly over at an absolute minimum 2 to 3 million EBITDA. But when you start getting up towards 5 to 10 million or more EBITDA, you start to open the mid-market. And at that point, you start to become very attractive. And actually, you'll probably end up getting competition or investment, particularly if the investment is going to be a disposal or what we call a majority acquisition of an asset.